borrowers out there that have got their mortgages, they listened to the Reserve Bank's advice, who said that the cash rate wasn't going to change until 2024. Exact opposite has happened. What can they do where now they probably hadn't expected the cash rate to hit 3% so quickly? With the Reserve Bank hiking its cash rate by 0.5% recently and many more increases to come, Australians are naturally worried about defaulting on their mortgage. As many as 65% of homeowners are actually saying they're concerned about defaulting on their loan repayments. And new research shows 1/3 have claimed to be very worried and concerned about what's happening. Now, 28% of them have considered that the cash rate wouldn't increase when they budgeted for the home loan, although the banks actually consider this in their assessment. Despite all the anxiety, 85% of them haven't considered taking action on their home loan. And today we're going to look at things you can do. So, Jaden, let's start off on the top. If you are experiencing home loan pain, you're worried about where interest rates are going, what can you do?
I think mortgage stress can happen from just not knowing. And like you said, more than 1 in 6 homeowners have sort of no clue on how changes in their interest rates are going to make a difference. And sort of by the end of this video, we're going to have shown you a way that we actually helped with one of our clients just recently refinance. Only bought in Feb 2019, so they've only had their loan, less than sort of 3 years or a bit over. And actually, we were able to renegotiate a 1.19% difference between the home loan rates without even having to switch lenders. But yeah, I think the thing you need to sort of start planning for and what we probably recommend even looking at now is just having to think about, well, how much you paying in your current repayments. You can use one of the calculators on our website potentially, and even, with interest rates kind of at 4% now, you can start budgeting at say 5% to give a sense of what you're paying. But never before has it been actually easier to sort of look at other options. And what we are starting to find is that a lot of the banks are starting to offer sort of new customers better discounts than before. Like the example I said, like 1.919% difference is a huge differential for existing bank customers compared to new to bank. Nathan, you did a video on this recently where a few of the banks have actually made it a bit easier as far as their sort of switching process. The CommBank, ANZ have sort of switched up, made it a bit simpler for switching where your situation changes. Do you want to just talk through that and how it's actually never been really easier to potentially refinance your home loan?
Yeah, and this is a common one. A lot of people think when refinancing, I have to go through the whole loan process again. I, can't be bothered getting my paperwork together. But surprisingly, it's becoming easier and easier. The banks are trying to make it a streamlined process. There's open banking, where effectively it's a platform the banks all share data with each other, so they can see your payment history. You got the credit reporting, which is all live. There's positive and negative feedback given on the credit reporting nowadays. So the banks are actually asking for less information, where previously you'd have to give the last 3 months credit card statements, home loan statements, all this sort of stuff. Now the banks are trying to smooth that, streamline it, make it a bit simpler, and less information is actually required. Now, Jaden, from the new data we've seen, 38% of mortgage holders had only budgeted for the cash rate to hit 3%. Currently, the cash rate's at 2.25%, and there's a real likelihood that the cash rate could get to 3% by the end of the year. So what do you have for borrowers out there that have got their mortgages? They listened to the Reserve Bank's advice, who said that the cash rate wasn't going to change until 2024. Exact opposite has happened. What can they do where now they probably hadn't expected the cash rate to hit 3% so quickly?
Yeah, the first thing I'd probably recommend is like pretty much like the article suggests, play a bit of hardball with your lender. And it's something that we'll generally go through as part of our process as mortgage brokers. It can be as simple as just, having a quick phone call, calling up your existing lender and saying like, hey, Mr. Bank, I know you're advertising, and just having a look on their website. You had an example of one with some clients that bank with Suncorp the other day, and they said, our interest rate was 4 point something percent. Online, they're advertising at 3.7. Like, what the hell, bank? Let's have a look. So they called them up, hit them up, said, hey, I can see you advertising this. And the bank said, oh, well, based on your LVR and you had a small deposit when you bought your home 2 years ago. And they just didn't budge. They didn't refinance, because sometimes when you're talking to your existing bank, they're looking at the valuation of your property from when you bought it from 2 years ago. That's where sometimes we can get involved. And again, depending on your bank, other cases, like I said, with the one before, we've been able to renegotiate and get like a percent discount without even having to switch banks and just in a phone call. So that's usually the best and first thing you can do. If you've got a variable rate, potentially call up your bank and say like, hey, pull up your socks, or I'm leaving. Sometimes I'll do it then and there on the spot. Sometimes it can be hard to get a read on what sort of rate you're meant to get, because a lot of the bank's websites will make it really convoluted. They'll have like LVR bands, depending on your deposit. They'll have purchase price, they'll have investor, interest only, principal interest. And if it all gets a bit confusing, that's where we'd love to help you out. As mortgage brokers, we obviously do this day in, day out. we know pretty quickly what sort of rate and where you should be, and if you're on a competitive rate, and if not. So if you do need help with that, that's definitely something we can help out with. Because, like Nathan said, at the moment, some banks are sort of bending over backwards to get on new business. And today, Nathan, I know one of the online lenders have come out with the cashback offer. So, do you want to take us through how that works, and even what the costs are when you're looking at refinancing? Like, does it end up costing you heaps and it's just not worth the pain, or is it cheap and easy?
Yeah, look, the lenders are so hungry for new business. It's not even funny. We've seen a bunch of them actually reduce their variable rate. So as the Reserve Bank is increasing rates, they're actually bringing them back down. The crazy thing is we've seen 2.25% increases in the cash rate. If you've had your mortgage for 12, 24 months, your rate's definitely gone up by that 2.25%. What we are seeing is new to bank customers are getting nearly a 0.5% lower rate than what existing clients have. So there's actually a big difference between new and existing, where we're seeing about a 0.45% difference, or a 0.5% difference between what new customers getting and existing customers are getting. That's number one. The second point there is refinance incentives. There's a bunch of lenders giving 2, 3, 4 grand refinance rebates just for moving your loan towards them. No strings attached. You get that back within 60 days from settlement. Cost for moving is pretty realistic. It's not really going to break the budget, especially when you factor in these incentives. Cost is about $350 for a discharge. There's some government fees and charges. Add another $350 there. All in $700. Max $1,200. But if you're getting a cash back, you're really covering all your costs. So definitely worthwhile looking into it. That's where you can contact mortgage brokers like ourselves to review and see what we can do. Jaden, 21% of homeowners actually said that they didn't know when they'd hit significant stress, significant mortgage stress. They didn't actually know when they were going to hit that. They didn't know what their mortgage repayments would need to look like for them to be facing that mortgage stress. What do you say to homeowners? How can they budget? How can they work out when the cash rate will get to a certain point where they actually might struggle to meet repayments?
Yeah. I think, like, firstly, it's probably about understanding the repayments and where they're at. The ASIC and Money Smart switching calculator, like I said, the one on our websites are usually good ones to go off, as it can show you, what your current repayments are. The other thing you can do is a bit of a comparison where, like, it all gets a bit academic, I guess, with the different interest rates, and it can get kind of pretty confusing where you're not sure, why even bother refinance, like 1%, 0.5%, it all, how do I know the difference? This calculator can be really good because, like in the example I used before with that 1.19% difference, if you're switching from 4.88 to 3.69, potentially this, and to your point, Nathan, it's going to reduce your repayments. So your repayments going to go from $2,700 per month to $2,400, all by changing rates. The added benefit, I guess, when you're looking at refinancing and looking at this sort of thing, is potentially if you kept making the higher repayments, so what you're making today at the higher interest rate, you actually, save obviously a bunch of money, which is amazing, but better yet, you end up paying your loan, 5, 6 years faster, by sort of accelerating, staying ahead of your repayments. So I think it's all these little things that you can look at like that can help with managing the costs and some of that stress, and I guess help reduce some of that anxiety, because, well, I'm already budgeting based on, at the moment, the rate's going up by 1.2% on what I'm currently paying. I know there's a bit of buffer there. I know that there's a bit of fat, and I'm not going to get caught out. Are there any other tips you'd give, Nathan, with sort of making sure, like, I think the thing with that anxiety is it's kind of like, how long's a piece of string? If you want a number to sort of work towards, then, like you said earlier, work off a cash rate of 3% with another sort of 0.75%, or maybe add 1% on top of what you're paying now. What else would you recommend when you're sort of doing this, just to allay some of those fears and concerns about the just unknown?
I think the main thing here is there's a lot of anxiety out there. People are worried. 85% of Australians have actually taken no action on their home loan, or potentially looked at avenues to reduce thousands of dollars in costs that could otherwise be wiped off their loan. So whilst you might be worried, you might be fearful, remember there are things you can do. So I think the first thing is to take action. Once again, hit us up at huntergalloway.com.au. We can have a chat. We can look at your situation, fully confidential, and see if there is anything we can do to save you thousands of dollars. It really doesn't take all that long, and it's quite simple. Now, the other point is, I guess there's a lot of Australians out there that are unsure how these rate hikes are going to impact their budget, their household budget. We saw Commonwealth Bank talk about the lag effect between when the cash rate is increased and when the bank recasts the repayments, gives notice to borrowers, and it actually affecting borrowers. That takes about 3 months. So, Jade, what do you say to borrowers out there? We've seen 5 rate hikes in as many months. Maybe we haven't really felt the pinch yet because that's still waiting to be recast, given notice to borrowers. What do you say to borrowers out there that want to really understand what that means to the bottom line?
Yeah, I think like obviously the home loans are an important thing to focus on and look at. I saw another quote the other day that insurance costs have gone up something like 75% in the last 3 years. So then it's always the other little things that you've looked at that you've been putting off. I know even for myself, I was looking at my electricity costs the other day and like, oh gosh, it's kind of gone up really quickly. And it's pretty easy to check out online and see save $100 here, $100 there. So it can also be those little things where obviously the home loans usually a big chunk, that's sort of 35% of your income, sometimes more depending on where you are. And then there's all those other bits and pieces that you can look at. So I think definitely to your point, Nathan, hit up your bank. We'd love to help out. Otherwise, sometimes, yeah, you can look to stay with your existing bank and renegotiate. You can sometimes look at other products as well. Is another thing we're seeing where with some of the banks, they might not renegotiate if you're on like a specific sort of basic products, and they might if you change. So it might mean you might be able to get a better rate without having to switch. You might be pregnant. You might be in a situation that you can't move. There's different banks that have different updates. So I think that's the first thing, and don't sort of discredit those other little bits and pieces like your power bill, phone bills, et cetera, to kind of save up some of those costs as well.
Excellent. Well, any final thoughts we have there, Jaden?
No, I think that's it. So I think, yeah, definitely worth looking at. Don't put it off. It's as simple as just hitting us up at huntergalloway.com.au. We can do all the legwork. You can just send us a statement. With a lot of cases, we can give you a quick note that's you're paying an amazing rate. Like, why would you bother changing? Or it's like, no, you need to look to review that, and we'd love to help out.